Hi everyone. Welcome to Level Up Dividends channel. The Investment Company Act of 1940 governs the registration of BDCs. BDCs must be registered with the Securities and Exchange Commission because they are publicly traded. A BDC must invest at least 70% of its assets in private or publicly traded companies with market capitalizations of $250 million or less to qualify. BDCs create money by investing with the intention of creating income as well as capital gains when their investments are sold. BDC's obvious allure is their large dividend payouts. Dividend yields of more over 5% are not uncommon in BDCs. Certain BDCs offer 10% plus yields in some situations. Of course, investors should do extensive due diligence to ensure that the underlying fundamentals support the dividend. Whenever feasible, investors should avoid dividend cutbacks. Any stock with an unusually high yield is a potential risk. In today's video, I present a list of 4 BDCs with impressive dividend yields. Stock 1, Gladstone Capital. Gladstone Capital focuses on small and medium-sized enterprises. These investments are made through a mix of stock, 10% of portfolio, and debt, 90% of portfolio, with often relatively high yields. Loans typically range from $7 million to $30 million in value and have maturities of up to 7 years. The stated goal of the BDC is to generate money that can be distributed to its shareholders. Dividend yield, 10.52%. Dividend safety, 21. Dividend growth, -1% per year in the last 5 years. Dividend growth streak, 1 year. I couldn't find an analyst price target for the company. However, the company's PE ratio is lower than its peers. It could be a good start to research further and try to determine its intrinsic value. Stock 2, Oaktree Specialty Lending. The firm invests in firms with an enterprise value of $20 million to $150 million and an EBITDA of $3 million to $50 million. The fund has a maximum hold size of $75 million and can underwrite transactions worth up to $100 million. Its primary focus is on North America. The fund aims to be the most active investor in its portfolio firms. Dividend yield, 11.64%. Dividend safety, 50. Dividend growth, 7% per year in the last 5 years. Dividend growth streak, 3 years. According to analysts, the stock could reach $21, which represents an upside potential of 15%. Stock 3, Triple Point Venture Growth. Triple Point Venture Growth BDC Corp focuses in providing money and advising firms during their private growth stage before going public. TPVG provides debt funding to venture development companies, offering a less dilutive alternative to obtaining more equity while simultaneously assisting with the business's acceleration and expansion. Dividend yield, 16.97%. Dividend safety, 31. Dividend growth, 0% per year in the last 5 years. Dividend growth streak, 8 years. According to analysts, the stock could reach $10, which represents an upside potential of 10%. Stock 4, Monroe Capital Corporation. Monroe Capital Corporation is a specialist finance firm that specializes in providing financial solutions to lower middle market businesses in the United States and Canada. It is managed externally by Monroe Capital and is elected to be classified as a development company, BDC. The firm typically invests in senior and unitranche secured loans ranging in size from $2.0 million to $25.0 million. Dividend yield, 13.95%. Dividend safety, 19. Dividend growth, 11% per year in the last 10 years. Dividend growth streak, 1 year. According to analysts, the stock could reach $9, which represents an upside potential of 25%. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content.